Hi, welcome to the White Alert for Thursday, the 17th of March 2016. So the Fed left rates unchanged. The data-dependent Fed chickens out again, blames global risk for unchanged rates, cuts rate hikes forecast. These are just some of the headlines. Also notice here that we've got former Fed employee avoids jail, gets $2,000 fine for stealing Fed secrets on behalf of the Goldman Sachs gang as well. It's just unbelievable, isn't it? Shame the mainstream isn't reporting this. Gold stocks and bond soarers, cowardly lying Fed batters banks, and the greenback, the dollar index plummeted yesterday, which normally, I have to say, from 2008 the market would have seen the dollar rally. We also saw gold and silver. These are the lows are in. We have a new bull market in gold and silver as well. If you're wondering why it's continuing to rise, that's because there is a lack of credibility in the Fed. And as Steve Leisman, who I'm not a fan of, he's on the mainstream CNBC, said, he asked the Fed if they had a credibility problem, and then the Fed chair Yellen replied with an extremely long and convoluted reply, which I am not going to read to you because, like I haven't got a clue what she said. But that's the backdrop to it all. The Fed, no credibility, as I've said for weeks and weeks and weeks. It's nice to see somebody from the mainstream actually questioning their credibility and their actions as well. So we saw the market not do a lot in the pre-market session. The crude oil figures came out slightly better, 1.2 million barrel surplus. This sent the market just a little bit higher. And then it was a case of the market moving lower. Had a sell signal there that came down to the scalp figure. It's not unusual for the Fed to mark the market down before they release some news, so they've got somewhere to go to the upside, because generally the market goes up when the Fed release any information, as you've seen over the last few weeks. And then we get the announcement, which you see there, big spike up. And then I'm just having a look at the daily chart to see where the market is with regards to the 76%. I'm just going to fast forward now. You can see Yellen is now speaking and answering questions in the conference, and this moves the market to the upside through the 76% at one point, and then the market comes back with a sell signal just after the close there. A boring day for observers, predictable for observers, and now thankfully we've got it out of the way and we can look forward to a resumption of the downside. Let's have a look at the daily chart and the implied volatility. So in the daily chart we can see the market now on the overnight market above the 76% retracement there and heading up to the 17,485. I want this market to go higher for the next couple of days, and then from next week to see things fall apart. Notice how poor the volume is. This market is going up on fresh air. This recent up move from the mid-Feb all the way through March is over. And we only have to look at the implied volatility to see this, which we'll do in just a second. Let's just have a look at the news, see what we've got out today. At 2 p.m. JOLTS jobs opening. That's the only one. We've got the unemployment figures out at 12:30 before the market opens. The volatility is extremely low at the moment, so the pre-market session really isn't a non-starter as well. So we've got just the one news item that's forecast slightly lower as well. So let's have a look at the implied volatility, 12.65, big drop from 14 yesterday, or the two previous days we've seen it at 14. You can see that dropping off a cliff in the chart there, which is great news. Another 2 up days would be ideal, up to the 17,500, and then it's good night to Vienna, because the implied volatilities are too low for this market, and therefore we're going to see another resumption of the downside and a return of the volatility as well. So really that's it, short and sweet this morning. There's not a lot else to report. Let's see what happens when the market opens later. Just have a quick look at the pre-market session. You'll see the market's sideways and not doing a lot really. Still a 40-50 point range though, which is a bit more volatility than I expected. Well, the market, you can see any signals that have been given apart from 2 out of the 4 have so far failed because the market doesn't know what to do. So the pre-market session is certainly out at the moment, but this could return next week as we see the volatility increase. Like I say, I would like to see this market move slightly higher beforehand, see the volatility move to new lows, and then it is definitely a good night Vienna. There's no credibility. The Fed doesn't know what it's doing anymore. They can't decide what to do, changing their minds all the time, which is fine. We're all entitled to change our minds, but be honest about it, and that's the problem, and have some sort of conviction of those changes of opinion, instead of saying that they're constantly data dependent and then pulling out the old chestnut of it's the labour market is the reason why we're going to consider increasing rates. And they're still talking of it, but not as fast during the year. Right, that's it. So thanks for your support. Thanks for watching. See you in the next one.